Here we are in March and spring is upon us. What is going on in the housing market? Interest rates just went up a bit, demand is still incredibly strong, and we don't know if there will be more inventory coming on the market over the next several months, and if rates will continue to go up. Even the best economists are scratching their heads on this. Hi, I'm Jen O'Hanlon with Wallace & Company, Sotheby's International Realty, and I will provide you with the most up-to-date information from the experts so that you may have some idea what we're in for over the next several months. I'm going to talk about appreciation expectations, inventory, and interest rates. First though, a few interesting Vineyard stats to know about. This February, the average days properties were on the market was 84. Last February, it was 601. This is a sign of extremely low inventory. The second interesting statistic is the average sale price on the Vineyard. Last February, the number was approximately 1.5 million. This year, it's 2.1 million. Now, we know that appreciation for the Vineyard was over 20% last year, but take a look at this chart on annual home price appreciation. Look at what the appreciation was from 2002 to 2005 compared to the last 4 years. It certainly puts the large jump we experienced in 2020 into perspective. And for anyone who thinks that values have to go down after last year, that is not what is being predicted. Home prices are forecasted to increase nationally at about 6%, which means we will most likely see something higher than that on the Vineyard. Now let's talk about inventory. We all know demand continues to be high. The million-dollar question is, will we see more inventory this spring and summer? Many economists have predicted that as the COVID-19 vaccine becomes more available and as the economy improves, homeowners will start to list their homes. This certainly makes sense, but on the flip side, we have many people with great equity gains considering selling, but realizing they don't have anywhere to go. Odetta Kushi, Deputy Chief Economist at First American, said, "The lack of existing homes available for sale remains the only drag on housing market potential. Many homeowners may want to upgrade, but do not for fear that they will be unable to find a home to buy, preventing more supply from reaching the market and exacerbating the lack of inventory. As a result, everyone stays put and the supply of homes for sale dwindles further." Seems to me we're back at square one with a continued inventory problem sticking with us for the remainder of the year. And mortgage rates? Not sure anyone really knows what exactly will happen there. Lawrence Yoon, Chief Economist at the National Association of Realtors, said mortgage rates should remain very low throughout 2021, although we may have seen the lowest already. I think overall the predictions are positive in that nobody is predicting rates to go up significantly, and I think we all knew the historic lows couldn't last indefinitely. On March 4th, Sam Cater, Chief Economist at Freddie Mac, said that since reaching a low point in January, mortgage rates have risen by more than 30 basis points, and the impact on purchase demand has been noticeable. While purchase activity remains high, it has cooled off over the last few weeks and is currently on par with early March prior to the pandemic. However, the rise in mortgage rates over the next couple months is likely to be more muted in comparison to the last few weeks, and we expect a strong spring sales season. In closing, it seems to me that demand will remain very high through the spring and summer as buyers hope to purchase while interest rates are just starting to creep up. Hopefully sellers will take note of this and realize that now is the time to put their house on the market to capitalize on this demand. If you have any questions about the market in general or specifically about buying or selling on Martha's Vineyard, please reach out.